Mr. Michael Jordan, ladies and gentlemen, the future of DeFi in Africa.
Hello, everyone, and yeah, it's great to be at CryptoFest. Today, we're going to be talking about the future of DeFi in Africa. And what I like to do with all of these things is, like, when we're talking about, decentralized finance, it's quite a complicated term. I like to go back to, what is the very definition of finance? Because something that we've all come across, we all use finance on a daily basis, but when you ask yourself, what is it actually? You realize that it's not the easiest thing to do. You go onto the internet and you'll see that Wikipedia says that finance has got something to do with the study of capital assets. Google talks about money management. Investopedia, the creation of investments. And even the Oxford Dictionary talks about cash flow and business. And you have to take a step back and say, why are they using all this technical jargon to try and explain this term? Where, as if you have to go back to the etymology of the word finance, you'll see that it's French, and that prefix fin, it actually means end. Think about it. The end of a fish is the fin. That country at the end of Europe is Finland. When you finish a race, it's the finish line. The exams you write at the end of the year, they are the finale. So what we see is that fin means to end. So what is finance ending? It's ending an obligation. Because when we were at school, we were told many things that were untrue. Pluto was a planet and these kind of things. And another thing that we were told that was also not true is that people used to barter within their communities. Anthropologists show that that might have been the case between communities, but within a community, there was a favor economy. So how this would work is I would go and draw water from the well, and I'd give you my water. I'd share it in with you. You are then obligated to do me a favor in the future. So if you go for a hunt, you're going to then share in your meat. And this worked really well with a small community because we used our memory to remember who is obligated to who. The problem is human memory is limited. And if we have a small community, we're at threat of the other community down the river. If they're bigger and they want our resources, they're going to wipe us out. So we had this dilemma. We want to be bigger, but we have a restraint on our memory. And this is when tokens were introduced. The whole idea with a token is it's not to try and solve the double one problem or be a medium of exchange, which is what we originally taught, but rather tokens were seen as a memory tool. The idea is that if I had a lot of tokens, it represented that I had contributed a lot to my community, and therefore, with these tokens, I can claim from my community. Now, originally, seashells were used. The problem with seashells is that it incentivized people to go for long walks on the beach and become millionaires. So instead, we looked towards something like gold. And what made gold such a great token was that it was really, really difficult to extract it from the earth. It was kind of like the original proof of work. If you're going to spend all this time digging up the gold, you've actually added value to your society. Now, the Romans would take this gold and they would mint it into these coins. And they used to do their minting not in a dedicated building. No, they used a religious temple. And it's interesting because money and religion have the similarity in the sense that both are very, very powerful if most people in your community believe in it. And just like how the Americans write, "In God we trust" on the greenback, so the Romans started writing their goddess's name on the token. And this temple was dedicated to the goddess called Moneta. And this is actually how we got the term money. They would write her name on the token, and people would say, oh, this is money. And if we look at the goddess of Moneta, what was she the goddess of? She was the goddess of memory. And this is why I get really, really excited with blockchain, because blockchain has this immutable property, which essentially means it's got a perfect memory, not just of who owns what tokens, but where those tokens have been transferred. So what we're seeing is that blockchain at its very core, at its fundamental, is better than traditional money, traditional tokens, as a memory device. Of course, money had weaknesses. You know, especially in the Roman times, people would take the gold coins, maybe melt it down, create some lead replicas, and then just gold plate it and create counterfeit. And we all know that with Bitcoin, you cannot create those counterfeits. Because this was the thing with finance. As much as it's a great technology, it's also opened the door to many, many scams. And a scam that we see happening in the insurance sector, I remember it was this crazy finding where they did the study and they found that people who were buying funeral insurance from a specific insurer were 1 million times more likely to die by crocodile. Because what was happening, and what made it even more bizarre, was that this was for people in the heart of Johannesburg. So I remember reading this and being like, okay, I don't want to go to Joburg Zoo because they're not feeding those crocodiles out there. But turns out what was happening is if you're committing fraud against an insurer and you come to the claim process for your fictitious policy and you tick death by crocodile, you no longer have to show a body in order to claim the benefit. Now, how do insurers deal with this? For life insurance, which is normally a big payout, there's a due diligence, they send an investigator, someone looks in your trash to make sure you know that the death actually occurred. But with micro-insurance, it's too expensive to do that. So what some insurers simply do is they absorb the fraud by charging a higher premium to everybody else. So a premium that should cost 1 Rand, people are now paying 100 Rand a month for this product. And this is where blockchain can come in and assist the insurance industry. Instead of trying to address fraud at the claim process, we're going to see in the future that our identification, and we've got this with Polygon ID, and there's a host of other projects that are doing on this proof of human, where if you can get your identification documents onto the blockchain, what you've then done is you've proved that this is a legit person. So when the insurer comes out to sell its product, it knows at the policy inception date that this is an actual person and not a fictitious imagination that the fraudsters have gone to Home Affairs and done a little bit of a back deal with. And how this is going to help is that now insurance, the price of it is going to come down, and people are going to be able to afford it. And this is a powerful tool that we need when it comes to managing risk in our lives. So blockchain can help the insurance sector. Now, I want to tell you guys a sad story. And it's one that, it just breaks my heart knowing that this is happening in our country day after day. And it's the situation of a person who's taken their entire life savings, put it in a briefcase, gone to somebody who they think is the owner of a house, handed that over, only for a week to go by. They get some paperwork, they think it's legit, only for the real owner to then come home, and now there's a legal case where they've actually bought the house from the person who was renting it and not from the actual owner. And this is where NFTs can come into place. So at the moment, yes, we've got NFTs, they're pictures of monkeys and art, and it's all fun and games at the moment. But we're going to get to a stage where our houses can be represented as NFTs, and we want that because that can then prove that you're the actual owner of this asset. If the title deeds were on a decentralized marketplace, then what could actually occur is instead of me having to put my life savings in a briefcase, in South Africa, you don't want to walk around with that amount of cash on hand. Instead, this transaction can happen on the blockchain. And the beautiful thing about NFTs is as soon as you make that payment, simultaneously that the person gets the money, you then get the asset, and you don't have to worry about the whole escrow account, real estate agents, and all the, the lawyers that kind of come in between. So not only will NFTs reduce the fraud in the housing market, but it will also open up quite a lot of interesting things. Because now this is maybe going to get a little bit on the technical side, because you can take your NFT and you can wrap it in a smart contract and introduce new functions. A particular one could be a delayed sales function. And what will happen here is, let's say I've got a beautiful house in Camps Bay with 10 million, but I need 8 million in order to fund my business's shortfall. I'm going to get the money at the end of the month, but I just need a little bit of that bridging loan. I can now go onto the blockchain, the Web3 marketplaces, and say, here, I'm prepared to delayed sale my house for 10 million for 8 million. So someone says, okay, great, here's 8 million, I've got the money, I can use it. A countdown starts ticking on this function. If I do not repay that 8 million at the end of the month with an interest repayment, then the transaction occurs and my 10 million Rand house goes to the lender. So the lender either gets their money back plus interest, great return on their capital, or they're getting a house at a discounted price in a form of collateral. So no more need of, the debt collectors with their baseball bat, knocking on your door, because this thing just happens automatically. Now you might be saying, okay, but Michael, what is the interest rate that you're going to charge? This is quite a complicated transaction. Well, if the bank is offering the lender 5%, but the bank wants to charge me 7%, myself and the lender, we can say, well, why don't we just agree at 6%? And suddenly, we've cut out the banks. We have now a peer-to-peer lending platform with our NFTs and our houses as collateral, and we can now tap into this liquidity, and this is going to just fuel our business prospects. I mean, there's another interesting thing with this delayed transfer function, where you can take it and essentially, let's say you want to buy one of these Bored Ape Yacht Clubs, let's say they cost 5 million, but the most you want to lose on it is 1 million. You can buy it straight away, put a delayed sale for 4 million. If the price crumbles, you just walk away, you lost your 1 million. But if the price goes up, you cancel that delay sale, and you've basically managed your risk. And as we start introducing more and more risk management tools into the Web3 ecosystem, we're going to start bringing a lot of the risk-adverse investors into the space. And this is the interesting thing that we're going to see once we start tying physical assets to your NFTs. Of course, we must be aware of the social problem that this might bring upon, especially if Africa's the first to do it. Because you can imagine if, let's say, we have some title deeds on, some beachfront property by Lake Malawi, and now you have the whole of the crypto world, instead of buying Bored Ape Yacht Clubs, to show off their wealth, they're buying property in Malawi to show off, check out my beachfront property. It's going to pump up the prices and might make it inaccessible for the locals to purchase. So we must remember that with every financial innovation, there is also going to be, a social drawback that we need to consider. Now, I think maybe one last thing I can chat about, and then of course we can always open the floor to questions, is another big pressing thing that's used to be very Africa specific, but the whole world is kind of feeling it now at the moment, is inflation. And I know we've been talking a little bit about stable coins, but in my opinion, a stable coin is a bit of a misnomer. We should rather call them pegged tokens, because we're pegging them to the price of another currency, and we've seen that the US dollar itself isn't very, very stable. Now, you want a stable store of value because that is going to incentivize people to save. Because if you earn money today and it's worth less tomorrow, you're not going to be encouraged to save it, you're going to be encouraged to spend it, and poverty is going to keep its dirty claws on you. So what we could do, and this is with blockchain, this is with smart contracts, is we can create a token that is linked to an inflation index. So for example, we might make an index-linked rand. So today, 1 rand is equal to one of these tokens. But if the consumer price index is, say, 10%, then what we might have is that one of these tokens is going to not equal 1 rand in a year's time, but 1 rand and 10 cents. And what essentially we've done is we've embedded an inflation-linked bond as a currency that people can use for a medium of exchange, but now it actually is a true store of value. So like I said, this is why it gets very, very exciting. When we look at the roots of finance, we look at its history, we see that it was essentially a form of memory tool, and how we used it as a medium of exchange and a store of value. And we start looking now towards blockchain technology and how it's a superior memory tool, and how we can actually program it to be in such a way that it is a better store of value and a medium of exchange. We can start to see that, DeFi is not just the future, for Africa, but it's the future of finance in general. So what I want to do is just, leave you guys with the thought of saying, instead of thinking about finance as, technical, mathematical, and formulas and, just making money, but remembering that it's a social technology. It's here to help us all collaborate and work together, and that's why I'm really excited for this technology. But if there's any questions, I'd love to take them. But other than that, that concludes my talk. Thank you very much.
So, Michael, just a quick one. Funding businesses through DeFi. Mm-hmm. I mean, how possible is that? Instead of going through VCs, sorry for the VCs out there, but if people are running hubs, for example, and you've got a great community, connected community, international communities, and you want to use decentralized finance to start funding businesses. Is that happening quite readily at the moment? Is it possible?
Yes.
What's the whole market like at the moment?
So, at the moment, with the centralized traditional financial system, we've got those stock exchanges, where you've got the Johannesburg Stock Exchange. It's a centralized place that they have certain criteria that need to be fulfilled in order for people to start raising capital. Decentralized finance says, we don't need you, stock exchange. We can actually go straight to the people. And this was happening quite a lot back in 2017 with those initial coin offerings, where people came and they said, this is my project, this is my vision, this is my business. Who wants to purchase a stake in this? And we can issue a token, and this token can either represent a share, be a bit of a voting protocol, and this is used in things known as decentralized autonomous organizations, otherwise known as DAOs. And it's definitely a possibility. Of course, it does open the door to scammers. People have said, this is my amazing project. People gave them funding, and then they bought a yacht, and we never saw them again. But for legitimate businesses, it definitely is another alternative solution to raising capital.
Okay, so if I go through a bank or anybody, anything else, they take some collateral from me if things don't work. How do you do collateralization through stuff like decentralized finance?
So what we could see is that in the future, people will put all of the money into a pool. And then what will happen is they'll have the management team. And that management team will get a small release of tokens, kind of like a salary for doing their job. If they stop doing their job or the community just wants a change of management, there will be a voting process where they'll just divert those fundings to the new management. And what we've done in this way is we don't have to take on collateral if we can remove the risk and replace it with another person in the community who's actually willing to take this vision forward. And again, we've actually removed the need for the Johannesburg Stock Exchange, because that's one of the big services that they do, is they provide a bit of a risk framework. But we can create the technology to actually address risk in another way.
Perfect. Are there any questions, by the way? So, does anybody have any questions on DeFi for Michael Jordan? I mean, do they ever confuse you with the tall dude? Oh, okay, hold on. Can we get a microphone? I just want someone to just take a microphone through to the lovely lady on the couch. Just introduce yourself and ask the question, ma'am. Thank you.
For sure. Hi, I'm Alex Pryor from EOH, Head of Digital Innovation. I wanted to know, in terms of DeFi in Africa, how you see the centralized exchanges, such as Binance, one of the sponsors, falling into this and assisting this.
So, I mean, it's very interesting asking Binance question to Polygon. I mean, it's one of these things where I kind of look at it and I think Africa's in this beautiful opportunity to have a bit of a leapfrog moment, where we might get to a stage where people earn in crypto and then spend in crypto. And like I said, a bit of a controversial opinion, but we could have a future where we're not having to onboard or off-ramp from fiat to crypto. If we're earning in crypto and our liabilities are in crypto, Africa could be in that position to leapfrog that need. Of course, that's going to be a bit of a headache for the regulators, because one of the places that they can go to are the exchanges and make sure that there is, know your customer and all those processes there. If we were to leapfrog that, like I say, I wouldn't want to be a regulator during those days.
Okay, great. Any other questions before we wrap with Michael? Just raise your hand. No? Cool. Let's hear it for Mr. Michael Jordan. Thank you very much.